Hi, this is David Parra with AARP Arizona, and with me is Rich Steven. Rich Steven is a licensed nursing home administrator. He is retired and he's also an AARP volunteer. Today, we would like to address on show number 7 the topic of how to pay for long-term care, and we will focus on long-term care insurance. Long-term care insurance. Uh, Before we do that, let me just carry just a brief conversation with Rich. Then we will follow a PowerPoint. So, Rich, we know that a huge percentage of people who use long-term care uh, depend on Medicaid. In Arizona, we know it as Altex. Arizona long-term care systems and supports or services, I should say. But we're not ready to cover that aspect of how to pay for long-term care today. We will focus on long-term care insurance. But we were talking off the air, just if you can just briefly, so you have a huge percentage that depends on Altex. So then who then buys long-term care policies? Can you put that in perspective for us, please?
Well, about 57% of the market of people who use long-term care use Medicaid. And then you've got about 16% that are getting it from the VA, they're getting it from public health sources, they're getting it from other areas. They get some degree of coverage. Then you have a little bit, about 11% comes from Social Security, and that's the value of Social Security. When you need it, it's there for you. About 12% comes from your own pocket, which is quite surprising, but
Right.
because of the significant cost. And last is about 5% come with long-term care insurance policies. And they come in a variety of different styles, and they are broken up and they can be quite complicated, but there are experts out there that can really help you make the best decision. But you're going to have to spend some time on it. It's not something you just decide, whoopee, I'm going to go do, because you aren't going to use that policy generally for 20 to 30 years.
Amazing. And it's obvious that this is one policy, just like life insurance, that the older or the longer you wait to purchase it, the higher the cost will be. So I personally do not have a policy. I guess I'm getting out of luck the longer I wait, because then the price skyrockets. Let's go into the PowerPoint, Rich, and I would like to just do a little review, as I always do. And when we talk about long-term care, we're talking about a range of services and supports that help with activities of daily living. And these activities are bathing, dressing, toileting, transferring to or from bed or chair, care for incontinence, and eating. We are talking about also instrumental activities of daily living. It could be housework, managing money, taking medications, and the like. I have the list right in front of you. If you're watching this video, you can stop the video and read those points. But this is the kind of care that we are talking about. And this is not necessarily the acute care, which is covered by regular insurance. Another point that I would like to review is, where is this care delivered? Well, a huge percent of the care, 80% actually, is delivered at home. It could be by a family member, unpaid caregivers, or it could be even by a paid caregiver. So this is 80% of this type of care is delivered at home. Then some of it is also delivered at community support services, namely adult care, adult daycare services centers, and the like. And of course, outside the home, which could be assisted living, nursing homes, group home, etc. So this is the type of care that we are talking about. And last week, or not the last week, but the last show, we cover that some of this care could be paid for by Medicare and regular insurance. You can go to show number 6 and get those details for this. Another way is long-term care insurance. And this brings us to today's show. Obviously, there's public programs, Medicaid, VA, personal resources such as savings, life insurance, annuities, reverse mortgages, and trust. But now we will focus on life insurance. So, Rich, help us understand. This is not a simple matter. Take it away. Help us to understand concepts, how we purchase, how it is used, how it is applied, this thing called long-term care insurance. Take it away.
Well, long-term care insurance, you have to make a number of decisions before you really know what you're looking for. And a lot of people say they don't want to go into a nursing home, but as you explained, David, there are so many other settings that long-term care services are offered in assisted living, in a home, in a group home, in your private home. They're generally supported by family members. So you need to say all of those things may be a possibility. When you're looking for long-term care insurance to help pay for those kind of services, you need to think about first, what's it going to cost me? What's the daily benefit amount I'm going to need? And because you're not going to use those services, as I said earlier, for 20 to 30 years, generally, what costs $200 today or $180 today might cost, $480 by the time you get there.
Right.
So you really need to think about the costs increasing each year and what kind of inflation rider you want to put with the amount that you pick. Then you need to determine, how long do I think I'm going to need this service? They call it the length of the benefit. How long do you want to be covered with your insurance? And some of it boils down to how much do you want to pay for up front, anywhere from 30, 60, 90 days, maybe even half a year. But that can be, again, a large amount of money. So you need to determine, can I support that? Then you have a waiting period before it starts. And after that, you are really going into the health qualification. Do I qualify for this? Because if you're 40 to 49, about 20% of the people are declined insurance because they already have adverse health conditions. By the time you're 60, it's about 30%, just under 30%. And by the time you're 75, 50% of the people that might apply will be declined. The company will not take you because of the health issues that you have. Even though you may think you're living independently and you're living okay, they will say, we don't want to take that risk.
So underwriting is a huge item, I suppose, in purchasing this type of insurance, correct?
It's a major issue. As I was talking with you earlier, that they've said that a number of companies, in the 1990s, there were about 100 insurers that covered long-term care insurance. And today it's about 15 because they didn't make good bets. And they then adjust the prices on people and people drop out. The companies drop out because they're losing too much money. So you have to be very careful on who you pick as an insurer. And the way you do that is you look for an independent insurance agent who covers all the policies that are in the marketplace and can help you work through the many different choices. You probably need to start doing that typically by the time you're 60, maybe 55 to 60, and make a decision shortly thereafter if that's going to be for you.
Let's do something, Rich. You basically cover all the slides, but I would like us to go back and see if there's any points that we could emphasize. All right. So this is what I review, and we encourage folks to, you can stop the video to, even though if you have been following our series, you should be very familiar by now regarding what do we mean by, or what we mean by long-term care. So I'm going to buy a policy, right? Let's just suppose. Uh, and it says here that it's designed to cover long-term care services and supports, obviously, including personal and custodial care in settings such as your home, a community organization. This is a given. I mean, it's obviously that's what it's for, to cover long-term care services. And so here it says that it reimburses a daily amount. So is that pretty much the standard of how all insurance policies, long-term care will function? They will reimburse a daily amount, and I suppose that this amount, you pick what that amount will be, and then based on that, that will determine the cost?
That is a negotiable amount.
Hmm.
Yes. If you said, I know it's going to cost me $200 a day today to be in a nursing home, but I can't afford that policy, then you could say, what would it cost my policy if I just got a little bit of help, say $50 a day or $100 a day, and then your premium will go down dramatically.
Wow.
as you take on more of the financial risk.
So if I'm taking financial risk, then I have to know ahead of time that I have this other funding source to supplement or to cover the lack of my policy, correct?
That is correct. You need to look at your own personal resources and or any other insurance that you may have that may include some types of that coverage.
Good. Now, the cost is based on age, on amount paid per day, which we already cover, and the number of days or years. Amount per day times number of days determines the lifetime maximum amount. Can you elaborate just a little bit on the concept of maximum amount?
Your maximum amount is really, I think the best way to think about that is cost per day times number of days covered. So it's a multiplication problem, and that'll give you a gross number. So it would be $100 a day times 700 days, and then that equals the total amount of coverage that the insurance company will do for you. What you're going to want.
This is lifetime or within a year?
That's lifetime.
Interesting.
And what you really need to consider is when you say, I will take $200 times 700 days, what is going to be the inflation that is going to occur over the next 20 years?
Right.
So that when you get there, you have some coverage. You can get that as a simple interest rate, or you can get that as a compounded interest rate. In other words, they will say, we will give you 5% more than whatever you sign up for. That's it. Or we will give you 5% a year compounded each and every year. And the compounding policy is significantly more expensive than the simple interest.
Wow. Wow. Going to the next point, pre-existing conditions, obviously this is all to do with underwriting. So they will do an assessment of someone's health, the age, and they will go from there. It even says here that some pre-existing conditions may disqualify you, right?
That is correct. They will run, depending on the policy and the person, but now almost exclusively, they will have a nurse come in and check you out, check your heart, and have you fill out a comprehensive healthcare screening, maybe even get records from your physician. And if you kind of fudge some things and they later find out about it, they will disallow you. So you got to play it pretty straight with what's your health.
Right. Now, here with the coverage, so basically they are not committing to pay an institution, but they will pay you to help you pay for those services in whatever institution you happen to be. Is that the case? So the policy is pretty much like the supplemental with Medicare, right? It just helps. It's an amount that they are paying as opposed to committing to paying this type of agency or service. It's just an amount they'll give you per day, correct?
Generally, all the policies you're going to find do that. They give you an amount and they apply it against that broad range of care settings that you have. You can negotiate in some policies to say, oh, I'm only interested in nursing home only.
Okay.
But they may not choose to offer it that way because they know that won't be really a viable way to give you services.
So the bottom line is this is a policy that will give you an amount per day. In general, that's how we should think in terms of this type of insurance, correct? Very, very interesting. Very interesting. And obviously, in order for them to give us that amount, the conditions, the services have to be very strictly linked to whatever was stipulated in the contract, right? In the policy.
Yes, your policy is how they're going to look at it. So you need to pick an agent again who is kind of on your side and helps you understand all of those terms that you always find in a contract. Contracts, if you don't deal with them on a regular basis, and especially health care contracts, you need somebody to help you make sure in layman's language that you have the coverage you think you have.
Right. Now, here we have the two triggers. So once you come to a situation where you need long-term care, I assume you have to call the insurance and they will do an assessment, right, to make sure that the needs that you have meet the criteria for long-term care services, and they will approve the amount that it's in the policy. Then there is something, the elimination period. So is this a form of deductible? And I assume that all insurance have this type of deductible, which translates to a number of days for which you have to pay first before they start paying. Is this accurate?
That's correct. You do have an elimination period. That is a negotiable part of your contract. You can say, I want immediate coverage. You're going to pay for that for the next 20 years. Or you can say, gee, I think I have enough personal assets, or my family does, that I could go out maybe and I'll pay for the first 6 months. And then your annual assessment for your contract will go down rather substantially. So you can really kind of negotiate what works for you, and they will tell you what works for them.
For all of us, all of you who are joining this session today, I have included a couple of websites, USA.gov and insurance.az.gov. Please go to those sites if you want to learn about what insurance companies are operating in the state. If you go to USA.gov, it'll be for the whole country. You can be specific. And let us conclude, Rich, let us conclude this show. And I would like to just ask you two more questions and we'll finish. So you're saying that it's best to contract or talk to an agent that serves multiple companies as opposed to just one, correct?
That's very important in your initial inquiries out there. You really need to see what the market is offering across the board. You want to make sure that that agent can work with any of the companies that are offering it in your state, because that's probably where it will be governed.
Okay.
It is in Arizona. And you will want to make sure that as part of that process, you see how frequently that company has raised rates along the way. Because in Arizona, you can raise rates. Companies can raise rates however they want, however much they want, whenever they want. And you have to make a decision then. So you really want to pick a reliable company that works on your behalf, that has a good track record, and will be there when you need it in 20 years.
Now, for Medicare, when people want to explore options, they go to the SHIP program, the area agencies and agents. And here we went straight to an agent that sells long-term care policies. Is there such a thing from the government side that will tend to be a little bit more neutral, that folks can contact for options on long-term care insurance?
There are websites out there that will give you unbiased information, but there are no agents within the government that would actually help you make those decisions. They just don't do that. They cede that to the private market.
Got it. Last question, Rich. Cost. Just give us a sense of what we're talking about. You can tell us, like, from the basic to the midpoint to the all-inclusive coverage. Just give us a sense. And I know there's so many variables because it depends on your condition, the age at which you purchase the policy. But give us just a sense, if you will, in terms of cost that a person will be paying in terms of premium for pretty much ever until the person passes away.
Well, in 2020, the average cost for a couple, and if you buy insurance, long-term care policy insurance for a couple, you will get a better rate because they balance it between the two.
Okay.
The costs are about $4,500 to $5,500 a year.
Okay.
$4,500 to $5,500. And if you buy it as an individual, women always pay more. There are reasons for that. But men pay about $2,100 on average at age 65, and women will pay about $3,100 on average. The women's rates are longer because guess what? Women live longer than men.
Right.
So the insurance company says we're taking more risk, and we need to charge you more money as a result.
Rich, thank you very much. I really value this conversation even for myself. And it's been a learning experience for me as we finish the show number 7 on this Facebook series. Rich Stephen, licensed nursing home administrator. He is retired, an AARP, very valuable volunteer. We appreciate it, Rich. Thank you so very much for helping us understand better this concept of long-term care insurance. Thank you again for joining us.
It's been my pleasure, David. Anytime.
Thank you. Thank you so much. And keep joining us for these shows. We invite you to stay tuned. We will continue to address this important topic, and week after week. We try to do a show every 2 weeks, so thank you again. And let me ask you also, please help us spread the word about this show. Take care of yourselves. Bye-bye.